Okay, we'll get started here. I know there's more questions rolling in. I do want to cover one more question, and then the others we'll cover at the end of session 3. The one question I want to cover now is about if a vendor invoices us for services and some materials or supplies, and let's say the total bill is $1,000 and 500 of it was for materials and 500 of it was for their supplies, and they broke it down separately on the invoice. Do we still have to send them a 1099? And if we do send them a 1099, what do we list? Do we list the 500 only because that's what the labor was, or do we list the full $1,000 for the total amount of the invoice? So the answer is this. If a contractor has provided any services at all, and if you paid them more than $600 in total, you have to send them a 1099, and then you send them a 1099 for the full amount, the $1,000. When they do their own personal tax return, they will get to subtract and deduct the cost of their materials on their own personal tax return. So you don't have to worry about them. You're not hurting them in any way by reporting the $1,000 payment. They're going to claim the $500 of materials as a deduction. They're only going to pay net tax on $500, so they'll be fine. So that hopefully that answers your question. If there's any services or labor provided at all, and you've paid them more than $600, that triggers the 1099, and you 1099 them for the full amount of the payments. Okay. So we'll kind of get started into session 3 here. We are on the home stretch. We will be done before you know it. I hope you're enjoying this as much as I am. I like talking about taxes. Maybe I'm weird that way. All right, we're going to talk about reporting cash contributions. To claim a deduction, donors need a contemporaneous receipt for each contribution of $250 or more. Contemporaneous, basically means on the spot or now, but the IRS has stated that you can send them a year-end contribution letter, and that still will meet the definition of contemporaneous. So if you send year-end contribution letters, you're fine. You have not violated any rules that way. Your donors just need to make sure they have those before they file their tax return, and you should issue those by no later than January 31st. So I recommend churches send out year-end contribution letters by January 31st. Now let's talk about the $250 component. You should not lump all contributions for the year together. You must list each contribution of $250 or more, and that includes the date, the amount, and the type. The type would be whether it was cash, check, or you could put the check number there if you wanted to, but some sort of description. Because if the contributor gets audited, this contribution letter is going to be important, and the church's contribution letter needs to show every gift of $250 or more. Now, I know most of the time when you send out your contribution letters, you include all the contributions for the year, even those less than $250. That's fine. There's not a problem with listing a $100 contribution, but if they're going to claim it on their tax return, they have to have everyone that's $250 above listed individually. So that's a big deal. Don't lump them all together and just give them a lump sum total. That is not appropriate. All right, second bullet point. Every contribution receipt must identify if the contributor received anything of value besides intangible religious benefits. So most of the time, your contributors are just donating to the church because they love the Lord, they love the church, and that's great. They're not getting anything besides intangible religious benefits. So the year-end statement needs to say that. So I've got the next bullet point, I've got some sample wording for you there. Unless otherwise noted, you did not receive any goods or services in connection with these contributions other than intangible religious benefits. So that is standard wording that should basically be on all of your contribution receipts and your contribution letter. Now, it uses the phrase unless otherwise noted. So let's say that the church has conducted a fundraising auction during the year, maybe for some worthy cause, sending the kids to church camp or something, and you auctioned off, I don't know, a Dallas Cowboy game suite. So, you get to sit in the suites up there with Jerry Jones for a game, and that auction off, and it sold for $5,000, but the value of that is a $2,000 suite rental. So the contributor is only going to get to deduct the extra $3,000. So what you would do there is you'd say, thank you for your donation of $5,000. you received $2,000 of suite rental to the Dallas Cowboys game in exchange, and then you have fulfilled your requirement. Now on their personal tax return, they're just going to deduct the $3,000. So if during the year you don't conduct any fundraisers, you don't give out anything of value, then you don't have to worry about that. You can just use the standard language. Contribution letters should also include the organization's name, address, and a signature. Again, you're just trying to help your donors out. If they get audited, you want the contribution letter to look as legitimate as possible so that they don't get hassled by an IRS auditor. Finally, at the bottom, payments for daycare or private school tuition should not be reported as charitable contributions. So this is a pretty big deal with the IRS. Apparently, in years past, they found that many people were writing checks to the Christian private school, and then they were counting those checks as charitable contributions as deductions on their Schedule A. So the IRS got really uptight about that. And so if you've got folks who both give to your church but also pay for daycare or pay for private school tuition, you cannot include those daycare or private school tuitions on their charitable contribution receipts. Let's talk about reporting non-cash contributions. I see a lot of non-compliance in this area, and so I'd like to be able to clean some of that up for you here today. Issue a thank you letter or receipt for each non-cash contribution of a tangible item. A tangible item just means, something you can touch. So somebody gives a piano, yes, we're going to give them a contribution letter or receipt. Now, the letter or receipt should include a description of the item, a pretty good description, maybe the best description you can give of the item, but should not include a value. Okay, the church is not in the business of appraising items. So someone donates a piano, and this is a great piano, it's worth $15,000. You say, thank you so much, this is wonderful, we love it, we'll enjoy it. Here's your thank you letter acknowledging that you donated this, certain model, certain year piano, but you cannot list a value. Now, the donor may say, well, I needed you to put the $15,000 value on there. Well, you don't. And if I did, I would be breaking the law. I cannot. The church is not a piano appraiser or any other type of appraiser. The recipient of a non-cash contribution should not list the value of anything on their non-cash contribution receipts. The appraisal component comes in on their side. The donor, if they gave a $15,000 piano, they need to get an appraisal themselves. Now, there is a special form that they have to fill out if their donation goes over $5,000, which includes them getting an appraisal. And there is a place that the church has to sign that form. But when the church signs that form, you're not agreeing to the appraised value. That was the paid appraiser's job. You're just agreeing that you received the product. So when you sign that contribution form that you get, after somebody makes a large non-cash contribution, you are not agreeing to the appraisal. You're just acknowledging that you actually received the item. Do not issue a tax receipt for donated services. Donated services are not tax deductible. So even though our time is valuable, in the eyes of the tax code, it's not. You folks, many of you listening today, many of you donate significant amounts of time to your church, and I respect that. I honor that. I have the privilege of teaching Sunday school and serving as a deacon in my church, and it is a joy. And it's, teaching that Sunday school for that third and fourth graders is my favorite part of the week. But I'm not going to get a tax deduction for it, no matter, I may think my time is worth $10 an hour, I may think my time is worth $100 an hour, but the IRS says your time is not a tax deduction under any circumstance. So let's give an example here. A plumber repairs the lavatory in the church's bathroom and does not want to be paid, but instead wants a tax deductible receipt for the amount he would have normally charged. Okay, you can't blame the plumber for asking this question. It's an honest question and request. The problem is it doesn't work. Okay, although it is appropriate to write a thank you letter for his kind service, do not imply in any way that his donated services are deductible. However, donated materials are deductible. So here's what you could do. You could write a letter that says something like this. Thank you for repairing the lavatory. That was very kind. Thank you for donating the ceramic lavatory and fittings that were used in the repair, period. You have done everything you can and need to do, and you've complied with all of the laws with that very simple statement. You haven't stated a value of anything. You're not an appraiser of lavatories. Even if the plumber turns in a receipt and says, well, I can prove that the lavatory cost $100, you still should not list the value in there. Now, the plumber should keep the receipt, put it with that donation letter that you gave him, and on his personal tax return, he can claim the $100 deduction for the lavatory as a non-cash contribution. He's got a letter from you showing that he gave it, but you are just not in the valuation business, even if they turn in receipts. Now, I'll change the scenario. What if the plumber says, well, I want to get reimbursed for the lavatory? That's fine. We'll be glad to do that. Turn in your receipts. Oh, the lavatory and fittings were $105. Here's $105 to reimburse you for that. We put that in the books as repair expense. That's perfectly fine. Then the plumber turns around and says, well, I'm going to give you the $105 check back. That's fine too. Now you've made a cash contribution to the church. We'll put that on a contribution letter showing that you've donated $105 worth of cash. That's your choice. But you're not going to value those non-cash items. You only put the amount on there when it is a cash or check or credit card contribution. All right, donations of automobiles. You know, we see this from time to time with churches. I hear it a lot on the radio in our area. There's a lot of nonprofits that are soliciting donations of automobiles, and I think they're worthy causes. I think they get a little zealous in their marketing and advertising. I think they try to imply that you're going to save the full amount of your car. So if your car's worth $5,000, this is going to save you $5,000 on your tax return. You know that's not true. Even if you do itemize your deductions, and even if the car's worth $5,000, we'll talk about that, it's still only going to save you your tax rate. So if you're in the 12% tax bracket and you get an extra $5,000 of deduction, that's going to save you $600. And $600 is nothing to sneeze at. So that's great to save the $600, but you did give up a $5,000 car to achieve that. And I just think when they, use their paid radio personalities to make those ads, they try to overemphasize that and maybe make it sound like it is a little bit more than it really is. Nonetheless, we're talking about churches. So here we go. If you receive a donation of a motor vehicle, a motorcycle, a boat, or an airplane, that must be reported on Form 1098-C. So that's a special form for you to give to the donor acknowledging the receipt of one of these specified items. There's additional reporting if you sell the vehicle. If you sell it for $500 or less, there's a little check mark box that you check indicating that you sold it for $500 or less. And as a side note, based upon my experience as a CPA, most of the cars you give to those radio ads are sold for $500. So I've probably had half a dozen clients over the years give cars to those radio ads, and it comes back every time. It was $500. And so now the client is saving 12% of $500, which is $60. And they're saying, I gave away my car and I got a $60 tax benefit for it. Yeah, that's been my experience. Anyway, I digress. Back to the task here. So if you sell the vehicle, you've got to check mark the box. If it's $500 or less, if you sell it for more, there's a special reporting you have to do to indicate that you sold it for more than $500. All right. The vehicle will be used by the church. There's a check mark box for that. Maybe somebody gives a van and you're going to keep it and use it for church purposes. That's great. Place to indicate that on the form. Or if the vehicle is going to be transferred to a needy person in furtherance of charitable purposes, there's a place to check mark that on the form as well. I think that's super cool where people donate to the church and maybe the church fixes up the vehicle and gives it to a person in need. And so there's a little special designation for that. Let's move on to the next topic, 501c3 tax-exempt status. All right, very in-depth topic here. So I'm going to try to cover this as in-depth as I can for you in the time we have allotted. 501c3 organizations are organized for charitable, religious, or educational purposes. They are eligible to receive tax-deductible contributions and are generally subject to annual IRS filing requirements, Form 990. Now, anytime you see me use the word generally, that means I'm probably going to tell you about an exception to the general rule in just a minute. And that is certainly the case here. So generally, we have filing requirements, Form 990, but there is an exception to the rule. All right. So bullet point number 2 there, that they're eligible to receive tax-deductible contributions, is why the IRS gets so uptight about 501c3s. So I'm not going to say the IRS is against 501c3s, but the IRS is highly interested in 501c3s. And the reason being, when I give to a 501c3, it's going to save me some taxes. Therefore, it's going to cost the IRS some taxes. So they just really get uptight about all the requirements of a 501c3. Now, generally, so that means there's an exception coming, an organization must file a Form 1023 application for recognition of exemption under Section 501c3. It's a tax form. It's a big, long tax form, in fact. You must file that form within 27 months of formation to receive a 501c3 determination letter. So if you form a nonprofit organization, let's say you get together with some friends and you want to start a food pantry ministry in your community, which is unrelated to the church, it's going to be a standalone entity, then you will need to file a Form 1023 within 27 months of formation. Like I say, it's a pretty long form. There actually are two variations of the form. You can see down here under filing fee that if you are eligible to file the 1023-EZ form, the filing fee is only $275. But to file the EZ form, you have to have less than 50,000 of gross receipts per year for each of the next 3 years. So if you are a small organization, you know you're going to stay a small organization, you're going to stay under that 50,000 limit, then you could get by with filing just the EZ form and paying the $275 fee. If you either do or know you're going over that limit, then you have to file the long form, Form 1023, and pay a $600 fee. Okay, let's move on to some more bullet points that talk about some of the exceptions to the rule. Remember I said that you've got to file the 1023 to get your 501c3 status unless you're a church, because churches are automatically considered tax exempt under 501c3 as long as they are a, in quotes, real church. So as long as you appear to be a church, you have meetings, you have a doctrine, you have religious training and teachings, and you have a group of people that assemble. Maybe you have a bulletin, an order of service. Maybe you're keeping minutes from your meeting, and you have financial record. If you meet all of these things, you're a real church. You are automatically exempt under 501c3. You are not required to file that Form 1023. And I'm going to venture to say most churches in America have not filed the 1023, and that is perfectly acceptable because they are real churches, therefore they are automatically exempt. I'm not sure when Congress put this in the tax law, but I appreciate it. I think it was probably 50, 60 years ago. But it's a wonderful thing that you can form a church today, and as long as you're a real church, you don't need to file your 1023. You're automatically exempt under 501c3. So all the things that pertain to a 501c3, you can receive tax-deductible contributions because you're a church and you're automatically exempt. And your donors can deduct that on their tax return. No problem, no problem. You know, in many, many states, if you're 501c3 exempt, you're also exempt from the sales tax that's charged in that state. We're here in Texas. That's certainly the case here. We go to buy something at Hobby Lobby. We show them, prove to them that we're tax exempt. We're not paying sales tax on our purchases. Okay. Even though a church is not required to file Form 1023, I'm saying you may still want to file 1023. So in the past, I've kind of changed my thinking on this. In the past, I'm like, no, you don't need to file a 1023. It's just extra money. It's extra hassle. You're automatically exempt. But maybe I've changed a little bit in these last few years because I've come to understand that if you have filed your 1023, it does give an extra level of comfort to donors that their donations are tax deductible. Okay. For most of your weekly parishioners, I don't think it's an issue. They're like, this is our church. We go here, we give, we deduct it. It's not a problem. But let's say you have a wealthy person in your community. That wealthy person walks in the door of your church one day to the church office and says, I want to donate $1 million. I've heard about you guys. I know about you guys. And I want to donate $1 million. Just show me your tax exemption letter and I'm writing the check right now. Well, wealthy donor, we don't have a tax exemption letter, but we're exempt because we're automatically exempt under 501c3 because we're a church. And that's absolutely true. And if the wealthy donor calls the CPA, they should confirm that. But wouldn't it be nice just to pop the letter out of the file cabinet and say, here's the letter and thank you for your check? So it just gives your donors an extra level of comfort if you have that 501c3 determination letter. Similarly, many corporations or large businesses will only make grants to organizations who have received a 501c3 determination letter. So let's change the situation just a little bit. Your church operates a food pantry ministry. That's wonderful. My mother was significantly involved in food pantry ministry, and it was one of the joys of her life. And so you're operating that, and now you have a wealthy donor or maybe a large corporation in town that says, that's a wonderful thing you guys are doing over there at your food pantry ministry. I want to donate $1 million. We just need a 501c3 letter. And the corporations frequently, it's not a situation where they can call and confirm with their, CPA. They're going to say either we have the letter or we don't. And if we don't have the letter, you're not getting the money. So if you think that situation could ever arise, you may want to go ahead and file your 1023 anyway. Finally, on this bullet point, a couple of years ago, I realized that Microsoft will give you significant discounts or even some free software. There's a group called TechSoup that kind of manages this program for them. But TechSoup, you can sign up through there and get Microsoft Office for your church at either free or significantly discount prices. Now, when you try to sign up for TechSoup, the first thing they ask for is a copy of your letter. Well, my church, we haven't filed our 501c3. We don't have the letter, and it took me quite a bit of hassle to finally convince TechSoup that we were a legitimate church. Now, again, it worked. I finally convinced them. I'm not even sure how. I just tried everything under the sun, and apparently something stuck, But they eventually gave it to me, and so we're now happy. But I kind of look back and say, probably with the amount of time I hassled with them, I probably should have just went to work and donated the software, So it just would have been a lot better if I'd had the 501c3 letter from the beginning. And then finally, there's just less confusion about your tax-exempt status when you have an IRS letter. I've heard of situations in churches where a disgruntled member says, we're not even exempt. We don't even have a letter. Well, we don't need a letter to be exempt. We're automatically exempt. But it wouldn't be nice if you didn't even have to argue with them about that. Okay. Form 990. Remember, generally, 501c3 organizations must file Form 990 annually. This is an informational return, does not result in tax due, and there are stiff penalties for filing it late. I mean, it's funny, you don't pay any tax on a 990, but you sure can pay some big penalties on a 990 if it's late. Now, churches are automatically exempt from the annual 990 filing requirement. So that's great news. Great news. 99% of the churches will never file a 990. Thank you, Congress, probably from many decades ago. Unless they have unrelated business income. So on the next slide, I'm going to spend quite a bit of time talking about unrelated business income. That's a big deal. But if you don't have an unrelated business income, as a church, you don't need to file your 990, and I've never seen a church have any problem with that. But the exemption from filing Form 990 does not apply to other IRS forms. So just because you're exempt from filing 990, don't think you're exempt from filing your payroll forms 941, your W-2s, W-3s, 1099s, etc. So all of those other things still do apply. And if you're, let's say you serve on the board of a nonprofit ministry that's not a church, it's one of those standalone food pantry ministries, well, then it is going to need to file a 990 of some sort because it's not a church. So the only automatic exemption is for real churches. All right, let's talk about that unrelated business income tax. Generally, means an exception is coming. 501c3 organizations do not pay any federal income tax. That's great. Your church receives contributions, pays its bills, and even if it has a little money left over at the end of the year, your church is not going to pay any federal income tax. You're automatically exempt under 501c3. However, if you have unrelated business income, which is UBI, you must file a Form 990T and pay corporate tax rates on that income. So what is UBI? How could we encounter UBI? Let me tell you, you don't want UBI. So we're going to try to do everything we can to avoid it. So what is UBI? And according to the IRS, an activity is UBI if It is a trade or business. So it's something that appears to be a trade or business. You're working at it. You've got customers. You've got revenue. It's a trade or business. Bullet point number 2, and is regularly carried on. This is huge. This is huge. So let's say your church youth group does a car wash to raise money for church camp. Okay. So they're washing cars. Okay. That could appear to be a business. There are car washes in my town, some of which would do hand wash, so hand washing a car appears to be a business, but it's not regularly carried on. This is a one-time event once per year to raise money for youth camp. So right there, bullet point number 2, the youth group car wash is not UBI because it is not regularly carried on. And number 3 is not substantially related to furthering the exempt purpose of the organization. So it has to be all 3. It has to be a trade or business, has to be regularly carried on, and is not substantially related to furthering the exempt purpose of the organization. So let's do some examples. The one-day car wash I mentioned is not UBI. And it's not UBI for 2 or 3 different reasons. Number 1, it was one day, not regularly carried on. 2, it was conducted by students who are volunteers. Any activity that's conducted solely by volunteers also is excluded from UBI. And then 3, we're raising money for church camp, which is related to our purpose. But let's contrast that and say, well, the church opens a full-time car wash, which is staffed by paid employees. That would be UBI. So the church says, we've got some property here. Let's just open a car wash. We'll hire some employees and make money. Okay, well, that's not related to the church's purpose. It's carried on regularly. It looks like a business. That is UBI. The profits from that car wash must be reported on the tax return, and you have to pay tax on that. Let's try a different example. An on-campus daycare where faith-based curriculum is used. I know many churches have on-campus daycare and they use faith-based curriculum with the children. That is not UBI, never has been. I hope it never will be. So that's not a problem for an on-campus daycare. Let's change the scenario. The church starts a daycare franchise business that does not use faith-based curriculum. So the church says, we're really good at running daycares. Let's just open a bunch of franchise daycares. We're not going to use faith-based. We're just really good at running daycares. We've started a business, and that is likely UBI. So hopefully that gives you some frame of reference about UBI. Now here's another thing about UBI. This may catch more churches. Generally, rent income is not UBI. Generally, not UBI for rent income, but there are exceptions. One of the exceptions is if you provide substantial personal services. So if you start running a hotel out of your church and you clean the rooms, that's personal services. Okay. If you run a hotel out of your church, that's UBI. If more than 50% of the rental is for the use of personal property, then that also would be UBI. So that would be where, let's say you've got a wedding, or you charge for hosting weddings, and you charge for the chairs, you charge for the tables, you charge for the sound system, and all of those costs exceed the building rental. So you're charging $300 for the building rental and $325 for the chairs, the linens, and the sound system. You're now charging more for the non-real estate than you are charging for the real estate. Now you have UBI. So your profits from those wedding rentals would be subject to the corporate tax rates. You'd have to file that Form 990-ET. So that's a pretty easy solution. Just make sure always the building rental is higher than all of the personal property rental items there. Now, here's the biggest one of all, though, for churches. If property is debt financed and you have rental profits, then that is UBI. So maybe catching you by surprise here. So let's talk about an example. A classroom building, which is debt financed, is leased to an unrelated private school. So private school wants to meet in our classroom building. We're like, sure, we only use it on Sundays. So we'll rent it out to you for $4,000 a month. And will help us make the note payment on that building. We definitely have UBI because we have a debt-financed building which is being leased to an unrelated party. That is UBI. This was a real live example. I'm pretty sure this happened in New York City. A parking lot, which was debt-financed, was leased to a neighboring business during the week. And so the church had to pay UBI on the rental of that parking lot solely because it was debt-financed. If there was not any debt on the parking lot or not any debt on that classroom building, then it's not UBI. So it's all about this debt financed part. Do we have debt that was used to purchase or acquire the property that's being leased out? And you can do it on a building by building basis. You say, well, yes, our church has debt, but it's not on that classroom building. It's on the gym, and we don't lease out the gym. Okay, then we don't have a problem, because you paid cash for, you built the classroom building 15 years ago for cash. You built the gym last year with debt. You're not leasing out the gym. Then that classroom building that you're leasing out is not debt financed. You don't have a problem. So you have to look at the specific property that you're leasing out and whether it was debt financed. If it is and you're leasing out, you have UBI. All right, one final little topic for me, then Kevin's got a few, and then we'll be getting you out of here. Repeal of the parking tax. Kind of an odd thing here. In 2017, the new tax law eliminated the deduction for businesses for transportation benefits provided to their employees, which included paid parking. So that's comprehensive tax law change, affected all businesses. So, lots of businesses provide paid parking, pay the parking for their employees, or provide them with transit passes. What this new law effectively said, well, businesses can't deduct that, and nonprofits, including churches, will have to report that as UBI. That's unbelievable to me. I can't conceive that, but it absolutely was part of the law. The ECFA, many of you are familiar with that organization, they fought that law and they won, finally. So just last month, December 2019, that parking tax was repealed. It was repealed going back to the first day. So it's as if it never applied. And so we're totally out of the woods, at least for now. We do not have to worry about the parking tax. All right, it is Kevin's turn.
Thanks, Jerry. How come I get all the fun topics? Fund accounting. All right, let's talk a little bit about fund accounting. First of all, fund accounting is not that dramatically different from normal, conventional for-profit accounting. Still double entry. The financial statements still look similar. There's really not a dramatic difference. The titles of the statements are different. There are some basic things, but practical for the bookkeeper, there's really not a lot of difference. So with that backdrop, let's talk a little bit about fund accounting. Now, fund accounting is different from for-profit accounting because the organization's money may be restricted for specific purposes. And this is a key point. This restriction or designation of donations, that is what would create a separate fund. If somebody gives money with restrictions or donations, and you don't have a fund that already has those same restrictions or donations, you'd have to create a new one. So generally, a fund is created by the acceptance of a restricted donation. Let's give you an example. Sister Betty wants to donate $10,000 for a new piano. That's very generous, gracious. Thank you so much for your concern and care for the ministry. The church is agreeable to purchasing a new piano and therefore accepts the donation. Key point, the church could choose to say, no, we're not going to buy a new piano. We don't want to create a new piano fund. But the church chooses to accept it. So now the church has a burden to separately account for the $10,000 until it's actually spent on a piano. Now, the new piano is going to cost $15,000, so other contributions are solicited from other members and added to the new piano fund. Then, when the money inside the fund has been spent, we bought the new piano, then the fund can be closed. So that's a simple example of what would be probably a short-term fund, and then you could close it. Now, I want to point out something that is we deal with a lot in small churches. Many churches believe that they need a separate bank account for each fund. Now, while that has some merit, and it's not really wrong to do it that way, it's unnecessary if you have software like FlockBase that will track your funds for you. You'll see in the example, we have one checking account, and at the bottom in the equity section, we have 4 fund balances, $10,000 in cash, and then we have $9,900 of that cash belongs to these 4 funds, and $100 is due to the government for payroll withholding. So remember, a fund is not a bank account. You could have one bank account and you could run 20 funds out of it. The challenge comes in if you don't have software, if you don't have accounting software that will track those fund balances for you easily, then it can become a challenge. Now, inside FlockBase, to create a new fund, you simply set the new fund up. Then you can add income accounts and you can add expense accounts that are mapped to that fund. So when you receive money, you simply put it in the right income account, so it goes to the correct fund. And then when you spend money, you simply use expense accounts that are mapped to the correct fund, so the money goes into and then comes out of the correct fund. And as long as you have all of your records up to date, at any point in time, you can print a balance sheet inside FlockBase and look in the equity section or the fund balance section, and you'll see the current balance in any fund. So if you have to answer a question, you're the treasurer, and you have to answer a question of how much money is available in the building fund, assuming everything has been entered, you simply print a balance sheet, and there's your number. That's how much is left in the building fund. Now, a fund is not a line item in the general fund budget. A general fund is a specific fund, and then you might have a building fund, a mission fund, but those are all separate. They're completely separate. So a fund would not have a the general fund would not have a line item for a fund. So let's do an example. Let's talk about youth, and this is very common. The church would have a youth fund, and the church would also have an expense account in the general fund called the youth department expenses. So we have both a youth fund, and then in the general fund, we have an account called youth expense, youth department expense. So the youth fund is going to be used to track designated contributions or fundraisers, a car wash, selling candy, whatever the youth do to raise money. So that's going to be tracked into the youth fund, and then disbursements are going to be made from those designated contributions. Well, at the same time that is happening, in the general fund, there is a line item called youth department expense, and that is where the church has allocated money to cover expenses for the youth department. That could be for curriculum. It could help subsidize the cost of youth camp. There's many things that could be spent, and most churches will find there's always more opportunity to spend money than there is money available. So this is a good example of using a youth fund and a line item expense in the general fund for youth expenses. Audited financial statements. Jerry and I work together in an accounting practice. Now our practice does not do audits. We do a couple of reviews and we do compilations. We mainly do tax work. So we are CPAs. We're not against audited financial statements, but there needs to be a reason to have one, or in general, we're going to recommend you not do that. Now, what is an audited financial statement? An audited financial statement results when you engage an outside CPA firm to conduct a full audit under generally accepted accounting standards, and it can be costly. Now, the purpose of an audit is to determine if the financial statements are free from what's known as material misstatement. And what that basically means, material misstatement, is if your financial statements are in error by a certain amount of money, then a potential donor or a potential investor or a bank or some outside third party would change their decision. So and let's use a different example for a business. If your business has $100 million per year in revenue and your financial statements are wrong by $100,000, nobody cares. Now, maybe the reason for that $100,000 error might cause someone to care, but just the fact that a $100 million corporation, $100,000 is not a large amount relative to that total. Now, for a corporation that has $10,000 per year in revenue, $100 might make a difference. So it's different for each one. But the point is, the auditor is only concerned with errors that are above that level. So they don't go in and look at every item. They only look at select items, and they're only interested in the high level. Is it right overall? Now, why might you need an audit? Some bank loan covenants require it. If you have a loan, the bank may be requiring it. They may require reviewed statements, which is a slightly lower level of work from the outside audit or accountant, or they might just require compiled statements, which is yet another lower level of work done by an outside accountant. But if they're not required, I think you should consider the cost and the benefits, because as I mentioned earlier, they're not going to, as a part of an external audit, go through very many of your transactions. And if you want something like that, that is not an audit by an outsider. So what do we recommend instead? We recommend developing internal control procedures or internal audit procedures as well that can be performed by volunteers on a rotating basis. And this is a much more economical way to keep everyone honest and ensure church policies are followed. One of the simple things that you can do is not allow the same people to count the offering every week. Have a team that rotates. And one of the rules that you should have with any cash, especially the offering, is that nobody is alone with the offering until it has been counted and verified. It's just a great way to protect honest people and to ensure that there's integrity in the process. And then you can also have different churches, name them different things, but you can have trustees or people who are volunteers who oversee the checks that are written. They look at the bank statements on a monthly basis. It's a very good thing to have a person who's not involved in check writing or the cash receipts or any other process, have somebody who's outside that do the bank reconciliation. You'd be surprised. It doesn't take a lot of effort to split up the duties in a way that can protect the church. Online giving. We have seen a dramatic increase in online giving over the last couple of decades. And in my opinion, if your church is not doing online giving now, you should be. And if you're not doing online giving in 10 years, you probably will really struggle to be around. And that's just driven by the simple fact that most people who are under the age of, let's say, 40, maybe 35, significant part of the people in that population don't have a checkbook, may never have had a checkbook, and they don't carry cash. They pay for things with credit cards and use online payments. So the church needs to catch up with that. Now, let me give you a couple of stats. According to nonprofitsource.com, churches that accept online giving increase overall donations by 32%. Now, if you're going to do online giving, or when you do it, ensure that you're dealing with a reputable processor. You need to pick somebody who is reputable. Be aware of what monthly fees they charge, and then also what their discount rates are. Now, with FlockBase, with our cloud-based system, we have partnered with Forte Payment Systems. Now, in their case, they charge a $15 monthly fee. It's like an account fee or statement fee at your bank. And then they charge lower discount fees. If we do an ACH transaction, either inbound or outbound, it's 15 cents per transaction. And then debit cards and credit cards are also at lower rates. And what this really equates to, and I will give you this advice whether you use FlockBase or you use Forte or you use somebody else, coach your people to not give with credit cards. Coach them to maybe give with debit cards, but your favorite should be the ACH transactions. And ACH stands for Automated Clearinghouse, and that is the system that many, if not most, employers use to pay their people online. It's direct deposit. So it's safe and secure, been around for a long time, and it's very cost effective. Let's just take a quick look at these other stats. Only 3 to 5% of Americans who give to the local church do so through regular tithing. 37% don't give at all. Only 5% of Americans tithe. And look at this, 80% give 2% or less. Tithers make up only 10 to 25%. Now, I think these numbers have probably been true for a long time, but they are on the decline. Churches that accept tithing increase overall donations by 32%, as I mentioned earlier. 60% are willing to give electronically. There's a lot of reasons to begin to give electronically, to begin to offer that. And if you'll note, in our cloud package, we do offer online giving in the Plus and in the Pro series. But in that Pro series, we also have an app that the church gets to completely customize, and you can do online giving through the app as well. So with that commercial for FlockBase, I am done with that. We'll go back to our pricing grid. And I believe Jerry has some questions and answers to cover. And we are sitting here at 11:46. We will be done by noon. If we don't get to all your questions, we will post answers. So we'll honor that. So have a great Saturday afternoon. Here's Jerry.
All right. Thank you, Kevin. Yes, I'm here just to finish this up with a few questions that have come in. Narissa asked, For our contracted musicians, are they now going to receive Form 1099 NEC instead of receiving Form 1099 miscellaneous? So, Narissa, the answer to your question is for 2020, so the forms that will be issued next January, a year from now, yes, you'll be using the new Form 1099 NEC. But for 2019, the forms that you're working on right now that you'll be mailing out in the next couple of weeks, that's still using the old Form 1099 miscellaneous. On this topic, though, I just want to also caution you about whether your musicians should be treated as contractors or whether they should be treated as employees. And I'm not going to make a decision. I'm not going to make an announcement, and not my business. Don't have enough information. But I will say this. There's a strong possibility that if the IRS were to audit you, they would say that most, if not all of your musicians should be employees, not contractors. So, there's the test about whether somebody should be treated as employee or contractor. Most of it has to do with control. If you control the worker, then they're your employee. If they're totally independent, then they're not your employee. So I'll just give a couple of wild examples. I have employees here at my firm, and you don't have to tell them I said this, but I tell them what to do. I mean, we give instructions to our professionals, and we say, okay, you're going to work on this assignment today, and when you're done with that assignment, this is your next assignment. So they're our employees. We tell them what to do. We provide their computers. We provide everything they need to get their job done. They're our employees. We must hold out taxes. An independent contractor might be someone who cleans the building. They come in anytime they want. They leave anytime they want. They can use any of their own tools, equipment. I don't care. As long as the building's clean, I will pay you. They're independent contractors. So you can see the stark difference between those two scenarios. You control them, tell them what to do. They're employee. They're totally independent, have all this freedom to do anything they want, anytime they want, as long as they get the job done, they get paid. Then they're a contractor. And so in terms of a musician, are you controlling them some? Well, we're telling them when to show up. We're telling them what to play, when to play. Now, they're probably bringing their own instrument, so that would go on the other side. So that's a difficult topic, but I'm at least raising your awareness that it is a potential issue, okay? Let's see here. Next question. Are the expenses for sending a pastor to a marriage conference reimbursable to the pastor? Well, maybe, maybe not. And this is probably a judgment call as well. If the pastor is going there to learn how to be a better pastor, to learn principles of strong marriages so they can turn around and teach that in their church, then I would say, yes, that's good training. That's, almost like continuing education for a pastor. That's great. If the pastor is just going there just to enjoy himself and have a good time and learn more about his own marriage, then that's a personal trip. Now, is there a fine line there, and who draws the fine line? Yeah, that's a judgment call. So you're not going to get me going on record saying one way or the other. Possibly not. You're going to have to make your own judgment call there. All right. James, you had a question about your medical insurance paid in January of 2020. If you'll send me an email on that, I want to take care of that one through email. I'm not going to charge you on that. Just send me an email, and we're going to discuss that through email if that's okay with you. Send that to jerry@flockbase.com. Okay. Lisa, let's do that one through email too, the church property, jerry@flockbase.com. If you'll send me that through email, that way I can reply back to you. All right. Pam Ruck, only issue a 1099 if the contractor is not incorporated, but an individual or an LLC. So you do send them to LLCs. You send 1099s to individuals, partnerships, and LLCs. The only 1099s you don't send are to corporations, whether they're an S Corp or a C Corp. So next question from Frazier. If you pay an independent contractor less than $600, the person won't have to report it on their taxes. No, that's not true. We are all on our honor to claim all of our income on our tax return every year, whether we received a tax form or not. So if I go and do contract work for my neighbor, cleaning his yard, and he pays me $400, I must claim that on my tax return. It's $400 of income, even though I did not receive a 1099. Does the contribution letter have to have receipt on it? No, it does not have to have the word receipt on it. It has that magic wording about did not receive anything other than intangible religious benefits for their contribution. So I think the key word it's got to have is contribution, and then that standard verbiage about nothing besides intangible religious benefits. Is a typed name as good as an actual signature? I'm going to say probably not, because if I'm an auditor, I think anybody can type a name in Word, using the script text, whereas the actual signature takes it back to a real live human. I've never seen anybody challenged on that, but you asked the question, which is better? And I think an actual signature is better. Have I seen them? I've seen them typed out hundreds of times. And like I say, I've never seen anybody lose on that yet. But if you want to know what's better, I do think an actual signature is better. Is there a formal letter to give a person to say $30 will not be reported to you or added up for the year? Oh, okay. So I think you're talking about contributions there, Terry. You don't have to list those below 250, and you do not have to tell them that you're not listing those below 250. Maybe you want to, but you don't have to. Rich, Jerry, Kevin, if we rent space weekly for our church services, do we need a W-9 from our landlord, and do we also have to provide a 1099 form back to them? And the answer is yes. Thank you, Kevin, for already answering that. Definitely, you got to give a 1099 to the landlord, unless it's a corporate landlord, and then it meets one of the exceptions. Kevin answered this one about receipts turned in online. Let's see. Filing 1099s. You can do those by buying paper forms at the local office supply, or there are several online processing companies, or if you use FlockBase, we can print those out on the 1099s for you. The website for Microsoft donations was TechSoup, TechSoup. TechSoup is the Microsoft discounts on your software. If we're not 501c3, we're not required to file a 990. Well, if you're a church, you are 501c3. I'm talking to Claire. If you are 501c church, you are 501c3 and not required to file Form 990. So Sandra asked a good question in my example. Are payments made to the car wash deductible? And the answer is not, because you received a service for that. So if the kids charge you $10 to wash your car, you've received a $10 service. You have no tax deduction there. Now, they wash your car and you give them $1,000. Yes, you have a $990 deduction because you gave $1,000 and the value of the car wash was $10. So I hope that helps you, Sandra. Frazier, if a church runs a faith-based daycare, money goes to the church, we don't have to report that. Yeah, I mean, if we have an on-campus faith-based daycare, I don't think you have a problem with that. That's still part of the church. Are the employees for the daycare part of the church employees? That depends. I mean, more than likely so. I suspect you only have one tax ID number. So if you only have one tax ID number, yes, the church employees and the daycare employees are all getting W-2s from the church. I suppose you could have started a separate entity and ran the daycare out of a separate entity, but now maybe we have a problem of how related is it to the church. Can we get David asked, can we get a determination letter if the church has been in existence for longer than 27 years? First, David, I want to mention the 27 was a month criteria, not a year criteria. So you have to file for your 501c3 within the first 27 months after formation. Now, you've asked a good question. What about a church that's been in existence? Mine's been in existence for 120 years. Can we file for our 501c3 now? And that's a good question. I'm afraid I don't know the answer. I'll do a little research, David. So if you'll email me on that, I'll get back to you. There's parts of it I know. Yes, you could file. Yes, you'll get it. But they may give you some grief and say, well, you didn't file it in the first 27 months. So what would be one option is if your church is not incorporated, you could incorporate your church and then file for the 1023 within 27 months. And your congregation, it's still the same thing. We met last Sunday, we meet this Sunday. It's just now we have ink after our name on our checks. It's really not a big deal to incorporate your church, and may also provide some liability protection for your leadership of your church. Thomas asked, if a gift is given to a minister of another church, do we still need to issue a 1099? Well, Thomas, if it was truly a gift, then you do not have to give a 1099. 1099s are for services rendered. But if there was any services rendered at all, now we're back to issuing a 1099. James asked, inside FlockBase, how do you map your income and expense accounts? James, and when you go to your chart of accounts and you pull up your income and expense accounts, there's a place on there to input your fund linkage. So it's pretty easy. He also asked if we had a FlockBase channel, and we do. We have a FlockBase panel, we have a YouTube channel. Sorry, I got confused there. We have a YouTube channel. So if you go to YouTube and you just type FlockBase, you'll find our channel. And we've got a number of videos, training videos about how to use all the various parts and set up the various parts of FlockBase. And so we encourage you to go visit our YouTube channel, and all you have to do is search for FlockBase. So speaking of that, we will post our webinar to the YouTube channel. And so we will send you a link to that via email so you can go back and rewatch the seminar. We encourage you to forward that link to your friends in ministry so they can watch the seminar as well. And if you don't mind referring them to FlockBase, we would appreciate that. Let's see. Kevin and I will go back through the list of questions just to make sure we haven't missed any. I know 2 or 3 of you folks are going to email me, and I'll deal with those separately. And we're going to make sure we haven't missed any questions. If so, we'll continue to post answers to those questions. Also, we're going to email you a survey that it will take only about 1 minute to answer, where we're going to ask you, did we do a good job? What can we improve to get ready for next year so we can do a better job? And then don't forget about our coupon code, half off 2020. You can find that posted in the comments there. And so if you want to move to the cloud during the month of January, you enter that coupon code, half off 2020, and you'll get half price for the remainder of the year. And we're going to honor that for your friends too. So if you say, I'm a FlockBase customer, but my pastor friend at the other church across the street, he's not, you can offer this coupon code to him during the month of January, and they will get half off for the remainder of the year. And for all of you existing FlockBase Cloud users, we're not going to leave you out. Send us an email, info@flockbase.com, and we will change your pricing and give you half price for the year as well. I hope you can sense and see that we are trying to be a blessing to churches. So without any further ado, I think we're going to sign off for the day, and I hope you have a wonderful Saturday afternoon. God bless you.